Good evening, and thank you for joining the Basics of U.S. Personal Income Tax. This is for tax year 2016. I'm Ginger Garvey. I'm the Senior Partner with Freedom Financial Partners. This evening, we're going to be covering two lessons. We're calling them Lesson 4A and 4B, as well as Lesson 5A and 5B. Lesson 4A is going to be on line 7, which is going to primarily cover the W-2 income and the related tax topics for that. So specifically today, we're going to be talking about the W-2, hang on a second, the W-2 and tip income, other income, non-taxable compensation, and the withholding of taxes. It's the big thing that we're going to be talking about. So beginning with taxable income. Taxable income comes in two forms. There's earned income and unearned income. Your earned income is what we're going to be talking about in this first class, which is Lesson 4A. We're going to be covering wages as well as other employee compensation. So looking at non-taxable income, there is non-taxable income, and that would be any of the items that are included in this slide. Child support is not taxable. Federal tax refunds, not taxable. Interest on municipal bonds, public assistance payments. So anyone who's receiving any type of public assistance, that is not considered taxable. Workers' compensation is non-taxable. That's insurance. Most life insurance proceeds, a portion of your Social Security benefits are not taxable. The amount that is taxable is based on your income level. And veterans' disability benefits, again, not taxable. And also gifts and inheritance are also not taxable. So there are several things, several types of income that would not be considered taxable, and it's important when we are working with people's income tax that we understand the non-taxable components as important, if not more important, than understanding those that are taxable. So we're going to talk about wages, salaries, and tips. This is the most common type of income, and really what we're talking about is any type of compensation that's in the form of cash, services, and property. So this is the W-2. The W-2 is the primary document that's used for reporting of income for wage or earned income. When you actually work for somebody else in someone else's business, you receive W-2s. The W-2 is reported on line 7 on the 1040 at the beginning of page 1. And this is what a sample W-2 would look like. There are details on all of the individual lines and what different codes can mean. I would refer you to the IRS documentation for the instructions for Form W-2 if you're interested in learning things in that level of detail. The key things that are relevant at a high level for the W-2 is employers must provide these by January 31st. Box 1 of the W-2 reports the total wages, tips, and other compensation. That box 1, if you only have one, that number is entered on line 7. If you have multiple W-2s, then you would total the amount on box 1 and add the total into line 7. If the box 1 information is incorrect, then you would receive a W-2C. The C stands for corrected, and you must ask the employer to make those changes. If the dollar amount in box 1 is wrong, you do not want to go ahead and file your tax return until that's been updated. If you have more than one W-2, you would add the amount in each box 1 and enter those totals into that line 7. If you do not receive a W-2 from your employer, you still must report the income. I've worked with several clients who've had businesses go out of business in the middle of the year and then they did not receive their W-2. At that point, you can file using a substitute W-2, and that's what you would need to do. Other forms of wages and compensation, in addition to regular pay, any advance commissions, back pay, awards, bonuses and awards, sick pay, holiday pay, severance, any business expense reimbursements, supplemental unemployment benefits, as well as disability income and employer-provided vehicles. All of these could be taxable on line 7. We're going to go through some examples. In this case, Tony Parker's salary for 2016 was $36,000. Tony's take-home pay was $28,378.50. because the employer withheld Social Security, Medicare, and federal income taxes. Which amount will be reported on box 1? The first is $28,378.50. What was his take home, or the full $36,000? And you would see the full $36,000 on the W-2. You would also see amounts listed in not just box 1, but you'd also see the amounts listed in boxes 2, 4, 6, which would total up the amount that was subtracted from his pay and would be inclusive of the Social Security, Medicare, as well as his federal withholdings. Kenya was employed by the ACE Insurance Company. Her salary in 2016 was $28,000. She was also given a Christmas bonus of $1,500, and she won a special contest in November. The prize was a 4-day vacation to Florida. The value of the vacation prize, cost of airline ticket and hotel, was valued at $1,200, but she didn't actually take the vacation until February. What is the total compensation her employer should report in box 1 of Form W-2? What you would be looking for them to report would be A, $29,500, B, $29,000, C, $30,700, or D, $30,200. And the amount would be the $30,700, which is going to be the $28,000 plus the $1,500 plus the $1,200. Tip income. All cash and non-cash tips that are received from customers are taxable income and must be reported on line 7 of the Form 1040. You would report to your employer any cash, check, or credit card tips that total more than $20 in any month. So you are going to report those to your employer if they are more than $20 for any one month. If it is less than $20, you are still responsible for claiming the income. You just simply wouldn't report it to your employer. So other forms that could be on line 1040 would be a taxable portion of scholarships. In the event that you received a scholarship or fellowship, a portion of that may come in the form of a W-2. Dependent care benefits, employer-provided adoption benefits, moving expenses and reimbursements. All of these are reported on the W-2, and they could possibly be taxable, and the details as to how you would determine, we'll look at those as we start looking at the deductions with the moving expenses, etc. So know that it could possibly be part of line 7, and it will come into play when we go into more detail on moving expenses, dependent care benefits, as well as adoption benefits. Non-taxable employee compensation, tax-free and tax-deferred fringe benefits. So there are some forms of employee compensation. For example, your medical benefits, if those are tax-deferred or tax-free, that would not be reported in line 1. You're seeing now on the W-2s in box 12, we're seeing the code DD in many of them, and the DD is the amount that the business is paying towards your medical benefits. So you are not being taxed on that amount, nor are you able to deduct that amount. It's simply stated on the W-2 with that code DD in the box 12 for informational purposes only. Other forms of non-taxable benefits, your employer's contribution to your retirement plan. You're not going to see that on your W-2. That would be simply added into your pension or your retirement plan. In addition, your contributions for retirement under a qualified deferred compensation plan may also not be taxable. So this would be anything that you put towards a 401k, or it could be contributions with a IRA, any type of compensation that you put into a qualified plan would be deducted from your taxable amount in line 1. Retirement plan distributions are taxed in the year that you withdraw them as part of your retirement plan. That's why they're not taxed in the year that you earn them. So for example, if I earned $15,000 this year and I'm going to put $1,000 towards my retirement, my taxable earnings would only be $14,000. That $1,000 would go into what we call a qualified tax deferred plan. And it would grow in that plan. And when I used the money, I would then pay the tax on the money in the year that I withdraw it. So here you see an example of that. Sam's salary is $28,000 and he participates in his employer's 401k plan. In 2016, Jack contributed $1,400. So you can see that listed here in box 12 with a code of D. A single D is your retirement contributions. A double D is the medical benefit. So each of those codes that are available for box 12 are spelled out, and you can look at those in the IRS documentation under the instructions for the W-2. Withheld taxes. This is an important piece that needs to be understood. When you are earning money, you are actually having taxes withheld. This is part of the tax plan in the United States. So you're generally expected to pay at least 90% of your tax liability throughout the year. And this is done either by withholdings from your paychecks, and most of us are used to that, or if you're self-employed, you should be paying estimated taxes because they are looking for 90% of your pay, of your tax liability to be paid during the year. Employees meet this obligation by having taxes withheld from their pay, the federal tax that's withheld on through each paycheck. In addition, you can ask for taxes to be withheld from other kinds of income. So if you're taking a distribution out of an account, or you have high dividend or interest earning accounts, you can actually request that federal taxes be withheld throughout the payment cycle. Each type of income and tax withheld is reported to you and to the IRS on various forms. And we're going to go through the W-2 and the 1099 miscellaneous in this lesson 4A. Then we're going to get into the many of the other forms of income in lesson 4B. So that's coming up right behind this one. For some types of withholding, the withholding rate is set by law. So it isn't something that you can change. The total amount of the federal income tax withheld is reported on line 64 of your 1040 and included in the total payments on line 74. Mandatory withholdings. In some cases, employers are being told that they must withhold. You communicate with your employer as to the amount that you want withheld when you provide them information on a form W-4. So people that are not savvy to the tax system, many of them don't know how to fill out the W-4. As a matter of fact, it's very common for my clients to call me up when they have a child who's getting a job, or they're changing jobs, or something's changing in their life, and they'll ask me, I've been given this tax form, how do I fill it out? And I will go through and help them at that time. The W-4 is a key piece of communication. If your refund is higher and you want more money back throughout the year, you can lower your exemption claims on your W-4 to put more money in each paycheck. Similarly, if you are paying a tax bill at the end of each tax cycle and you want to have more withheld from your paycheck, you can adjust that on your W-4. The W-4 includes 3 types of information: what your filing status is, whether you're single or married, how many allowances you can claim, and if you want any additional information that's withheld. So here's an example about why this W-4 is so important. Dick and his wife were divorced in January of 2016. Since then, their 2 children have lived with his ex-wife, and she will claim them as her dependents. Dick did not change his W-4 to account for his loss of 3 exemptions or change his filing status. His employer withheld taxes as if Rick were still married with 4 allowances. The total tax withheld was $7,533. In 2016, Rick's AGI was $62,749. Because of his loss of 3 exemptions and his change in filing status, his taxable income is going to be $52,599. If he'd still been married and his wife had had no additional income, his taxable income would have only been $34,549. His standard deduction would have been $12,400, rather than, in this case, it's 6,300 for the exemption for this year. Sorry, I'm going to make that change. And he would have had 11,830 for the 3 additional exemptions, and that number is also a miscalculation. His total tax for 2016 is calculated at $9,000, and $9,000, and he would have previously, his tax amount would have been $4,271. So paying that $7,533 throughout the year, he'll still owe $1,467, possibly with a penalty. And that is instead of having a refund check of $3,262. So it is really important that you go in and you update that W-4 when you have a major change in your life like that. In most instances, we're able to work with our clients and make sure that their W-4s are set correctly after the first year that they've been with us. And by doing a little bit of proactive education, you can ensure that they know to call you when they make these changes. This is what the W-4 looks like for 2017. There is a copy on the website that you can download if necessary. It's also on the IRS website. So the key ideas of this particular lesson 4A is the total of all taxable compensation earned as an employee is entered on line 7. Taxable employee compensation includes payments given in the form of bonuses, awards, any strike benefits, severance pay, and any additional salary or wages. In addition to the amount that's entered on line 7 from your W-2, your employer would provide you with that W-2. Their amount should be correct. If you receive more than one W-2, you would add up the amount in all of the box ones and put that total on line 7. If you are working in a tip industry, your tip income should be reported to your employer for any month where it's more than $20, and it should be included on that W-2. Other income that must be reported would include any scholarships, fellowships, any household employee income, anything that's not reported on the W-2 because you didn't receive one, such as a business going out of business, and non-excludable portions of benefits such as dependent care or the adoption credits. So we will cover those other items when we are talking about the dependent care credit. We will discuss how that withholding sometimes is an option with your different employers. Deferred compensation would be the part of the pay that's received by an employee that would be contributed to qualified retirement. So this is where you made $30,000, you put $2,000 towards your retirement, and you're only going to see $28,000 in box 1. The other $2,000 will be noted in box 12, usually with D as the letter or the code, indicating that it is money that went into a qualified contribution account. Also, you are supposed to do withholdings throughout the year, and in fact, you're expected to pay at least 90% of your income tax liability as the income comes in throughout the year. We use withholdings when we have employers. In addition, you can request withholdings on other types of income as well. The amount of your pay and the information that you provide on the W-4 would determine the amount that the employer withholds. Withholding is mandatory in some instances, and if you don't have enough tax withheld to pay your tax liability, you will end up with a tax bill at the end of the year. So checking those W-4s and whether people are having their withholdings handled as if they are single or married, and how many exemptions they are claiming, all of that is going to go into what money is being put into the tax system throughout the year. So I hope that you've understood what we've been talking about. I am looking to possibly do an additional class that will be specifically on tip income, but this gives you a high-level overview of the W-2 as well as the withholdings and the W-4. Please feel free to visit our website at freedomfinancialpartnersllc.com, And we appreciate you watching. Like the video, share it, and we will post the next class very shortly. Thank you.